Hi Vic, my name is Udit Chhibber. My student number is 6842380, and these are my answers for the Fin 111 final exam. I'll start with question one. So there are two primary ways in which a corporation can raise funds in the financial market. That's debt financing and equity financing. And the market for equity securities is organized in a central exchange known as a stock exchange. Now, stock exchange plays various roles within the financial market of a country, the most important being that of being a primary market to facilitate newly issued shares through the IPO, and a secondary market to help in the trading of already issued shares or ordinary shares. Okay. Now, when these ordinary shares are issued to existing shareholders at a discount, they're known as a rights issue. Now, apart from shares, stock exchanges also facilitate the trade of other forms of instruments such as ETPs, CDFs, and REIT stocks. Now, investors analyze the shares based on the share price index, which shows the movement of the share price over a certain period of time, and also the risk associated, that is the systematic and the unsystematic risk associated with each share. Now, the Securities and Commodities Authority in the UAE was established in 2000 in order to create a market where people could safely invest in securities and commodities. This eventually led to the development of the UAE financial market. And now we shall take a closer look at four institutions that are part of the UAE financial market. The first is the Dubai Financial Market, or DFM. It's a secondary market for the trading of securities, okay, issued by public companies, bonds by federal local governments or local public institutions. It was the first exchange in the UAE, and by 2007 it was listed on the market. It operates on the principles of Sharia law, and it has allowed Dubai to develop into a financial hub that it is now. Okay, it performs all the functions and roles expected of a stock exchange, such as providing a market range for securities, providing securities trading system, undertaking clearing and settlements, regulating and monitoring the market, and it also plays the role of a primary market through its IPO center. Now, I took the 6 months data starting from January 1st of the share price index and plotted it on a line graph. What it showed was that there was a very distinct feature that stood out. Since January to March, there was a steady decline in the share price index, and it reached its lowest point around the end of March, around the third or fourth week of March. Ordinarily, this would take more analysis, but given the year that it's been, it can be attributed directly to the impact of COVID on the city. Furthermore, this was also the period when Dubai was in lockdown, I think around 4th April onwards for 2 weeks. So closer to the lockdown, a lot of businesses were shut, schools were shut, universities were shut. And this had a major impact on the share price index. The calculations were done for the risk, return, and beta. The risk was calculated as 0.26% using the standard deviation formula. The return was 0.02453 using the average formula, and the beta was calculated at 1.47. The next institution is the Abu Dhabi Securities Exchange. Just like the DFM, it is also a stock exchange established in 2000. It too performs all the functions and role that come with being a stock exchange. And in this case as well, the 6 months historical data was analyzed from the ADX starting from January 1st. And without any surprise, the line graph was very similar to that of the DFM. There was a very distinctive decline in the share price index during the end of March and April. And again, this can be attributed to COVID. The risk, return, and beta were calculated. The risk was calculated as minus 0.10%. The return was 0.024524, and the beta was 1.47. The other two institutions are not stock exchanges. The first is the Dubai International Financial Center. It's established as a free zone and a financial hub in 2002. It enables the flow of investments and the facilitation of trade across the Middle East and North Africa region. And the final financial institution is the Abu Dhabi Global Market, established in 2015. It's the most recent of the institutions. It's an international financial center which has three independent authorities: a registration authority, a financial services and regulatory authority, and the ADGM courts, which provide a business-friendly environment and assist various business interests. Now, through the course of this essay, we examined the role of stock exchanges, the nature of trading equities, the risk associated, and the measure of the share market price. And we also delved deeper into the role that was played by four financial institutions in the UAE and the impact that COVID had on them. Question 2. The UAE established the National Committee on Sustainable Development Goals in 2017. And for the purpose of this essay, the commercial bank and financial institutions chosen are First Abu Dhabi Bank and Marjas Al Futtaim, respectively. Now, in the 2017 Sustainability Report, FAB grouped the 17 goals into four distinct categories, with a set of SDGs assigned to each category. The categories were governance, integrity, risk management, responsible banking, responsible employment, and positive social impact. Now, in terms of governance, both the FAB and Majlis Al Futtaim (MAF) are signatories to the United Nations Global Compact Principle, which encompasses labor regulations, human rights, and the environment, along with actions that advance societal goals. Now, as part of the Global Compact, FAB has set out a group of environmental policies to reduce their carbon footprint in accordance with goals 12 and 13, responsible production and consumption and climate action. To this end, FAB applies the ISO standards for greenhouse gas emissions verification and also participates in the Carbon Disclosure Project to measure and disclose their climate impact, as shown in the ESG reports. Similarly, MAF in 2014 committed a 5-year strategy bound by environmental targets such as reducing water and energy usage and improving waste recycling rates. This went in tandem with committing to longer-term goals such as being a positive water user by 2040. Okay, MAF also concentrates on sustainability training for all employees throughout the value chain, focusing on tenants and tier 1 suppliers in accordance with Goal 11. FAB has taken its governance structures in accordance with the goal number 13, peace, justice, and strong institutions. This involves the protection of human rights, prevention of discrimination, and working against corruption. To this end, FAB has a whistleblowing policy and a directors and employees code of conduct to ensure transparent and ethical corporate governance. Now, one of the most important pillars of the bank's approach is the practice of responsible banking in accordance with the SDG goal number 13. FAB has used financial solutions to target climate change with many projects undertaken in green finance. The most prominent would be the introduction of a 5-year Hong Kong dollar 750 million green bond. And FAB is the only financial institution in the MENA region to do so. The green bond provides finance projects in accordance with the 6 goals. For each of these, the environmental impact is assessed and reported in accordance with international frameworks. The portfolio itself is divided between 4 categories: solar panels, green buildings, energy efficiency, and wastewater management. Further, the bank was also the book runner for UAE's first green sukuk, sold by MAF, which was oversubscribed. The funds raised were used to finance and refinance green projects focused on buildings, sustainable water management, energy efficiency, and renewable energy. In December 2019, FAB provided the first SDG tied loan of euro 100 million to Etihad to build a sustainable expansion for the Etihad Eco Residence. This project is LEED Platinum rated and met the requirements for 2 of the Sustainable Development Goals, Goal 7 and Goal 9. Further, FAB, in partnership with multiple financial institutions, provided the region's first green revolving credit facility to Masdar. And in 2018, in accordance with Goal 3, FAB invested $88 million in Gavi, the Vaccine Alliance. Similarly, MAF, through the Green Finance Network of 2019, is planning to facilitate projects both now and in the future that would help the environment in a positive manner and reduce the amount of carbon emissions through the issuance of green bonds and green sukuks. The assets within this bond were chosen through international certification such as BREEAM and LEED in accordance with Goals 7, 9, and 13. Further, in order to ensure responsible selection and performance of these projects, they established a Green Finance Steering Committee. Recently, through this Green Finance Framework, in October 2019, MAF announced the raising of $600 million through the sale of green sukuk. In its commitment to responsible employment, FAB promotes programs for employee engagement, physical and mental wellness in accordance with Goal 8. This has led to an emphasis on training programs for employees to promote career growth through their in-house facility, the FAB Business School, and to help employees with soft skills and compliance training. Question 3. Now, a personal long-term financial plan is important because it allows an individual and families to have an in-depth understanding of their income, savings, investments, and spending patterns. And it allows them to make prudent financial decisions for the future while keeping abreast of any financial difficulties that may arise. Now, before we go into building a personal financial plan, it's important to understand some concepts that come with personal financial planning. The first is to understand that those people who end up accumulating a lot of wealth over their lifetime follow certain habits and mindsets religiously day in and day out. Furthermore, it's also important to understand what wealth actually means and identify what level of wealth that you as an individual aspire towards, whether it's financial stability, security, financial freedom, or financial abundance. Okay. Following this, it's also important to have a keen understanding of cash flow management, because depending on the level of income that you earn as an individual, you will have different ways in which you spend your cash, different ways in which your cash is used. Okay. A good way of understanding these aforementioned concepts is to create a personal balance sheet with individual assets and liabilities and see what the total net worth is. That is total assets minus total liabilities. And last but not least, another key component of understanding of understanding personal finance is the understanding of what is known as the hierarchy of financial need, which consists of insurance planning, savings planning, and retirement planning. Okay, because when you're building a financial plan, it's not just about the present; it's also about the short term and the long term future. So it's always good to know where one's funds are going in terms of insurance, savings, and retirement planning. Now, for the course of this essay, I was asked to create a personal financial plan that focused on personal income, expenses, and the calculation of the present value of all future earnings. The scenario with which the plan was created consists of the following details. A duration was taken of 30 years, age 45 to 75. The job that was considered was a managerial level corporate job. The inflation rate was considered as 2.5%. A starting salary of 720,000 dirhams per annum was considered. This is both for me as an individual and a spouse. The number of children sent to college were one, and the retirement age was considered as 60. Now, the financial plan was created for the following income: salary, investment income, bonus, pension, gratuity, and rental income. And the expenses were calculated consisting of house, diva, food, education, health, and household expenses. Each of the incomes and expenses were calculated year on year, and for the year, every year the net income was calculated using the formula total income minus total expenses. Following this, the present value for each year's net income was calculated using the formula PV is equal to FV 1 plus I over N. Then the present value of all the years were added, was summed, and the future earnings, the present value of all future earnings across 35 years came to be as AED 12,459,967. In conclusion, the process of creating a personal financial plan involved understanding the components that went into financial plan, identifying the level of wealth that were attainable, determining cash flow management patterns, and understanding the hierarchy of need. A personal financial plan serves as an important tool in the effort to earn wealth and navigate through financial pitfalls, both for the present and the future. Question 5. Now, foreign exchange is the exchanging of one currency for another. A foreign exchange rate is the price or value of one currency expressed in terms of another currency. And one of the key questions regarding foreign exchange is, why do individuals, corporations, and countries trade in foreign exchange? Some of the reasons why are, firstly, for international trade, the importing and exporting of goods; capital movements; offshore borrowing and investing; hedging; speculation; and this thing called exchange rate arbitrage, which means making a risk-free profit by buying and selling an identical currency in different markets simultaneously in order to take advantage of the different prices in different markets. There are two main types of arbitrage, which is, firstly is geographic, when two dealers of different locations quote different rates in the same currency, and the other is triangular, when exchange rates between three or more currencies are out of perfect alignment. The primary purpose of this essay is to show that if geographic arbitrage is possible in Dubai. The research was carried out by looking at quotes from different banks and exchange rates across UAE pertaining to four currencies, which were the Canadian dollar, the GBP, Indian rupee, and Omani Riyal. Now, based on the buying and selling quotes of the different currency pairings across five financial institutions, it was safely concluded that there is no opportunity for geographic arbitrage across Dubai for the listed currency pairs. And for each of the currency pairs, the selling price quoted by any one of the financial institutions is always higher than the buying price quoted by the rest. Now, furthermore, the issue of transaction costs do not come into play due to the lack of any geographic arbitrage opportunity to begin with. Now, although geographic arbitrage is not always guaranteed and depends on a number of factors, there are specific reasons as to why UAE has no opportunity for geographic arbitrage. The first is the fact that the UAE is pegged to the US dollar, which means that movements in interest rates and exchange rates in the UAE are directly linked to those in the US. Secondly, UAE is home to a large expat community. This means that there is a lot of money being exchanged within the UAE and some being transferred outside the UAE to countries like India, Pakistan, and the UK. By ensuring that the buying and selling rates for currencies do not exhibit a vast difference, banks and currency exchanges ensure that they have a reserve of foreign exchange and they do not suffer losses due to any one institution undercutting the market rate. And lastly, the impact of COVID-19 has been detrimental to economies around the world. Despite the UAE government issuing a stimulus package to help businesses, there have been and are predicted to be unprecedented job losses and salary reductions. This would mean also that many expats would leave Dubai and go back to their home countries. And the outflow of expats coupled with the restrictions on tourism would reduce the amount of foreign exchange currencies being circulated in and out of the UAE. Thus, during these trying economic times, it would be very unlikely to find a scenario within Dubai where different banks or exchange rates are offering vastly different quotes on the buying and selling of foreign currency. In conclusion, in order to investigate a possibility of geographic arbitrage in Dubai, 4 currency pairs were examined with the dirham as the base currency, in addition to which the buying and selling quotes were compared across 3 banks and 2 exchange houses. The research and its application showed clear indications that geographic arbitrage would not be possible in Dubai for the given currency pairs. However, if the scenario of examining the same currency pairs across 2 different countries emerged, then there could be a potential for geographic arbitrage.